Dear students, welcome to Swayam Shikshaa. We are here with one more video, the next theme, that is theme 9. And I hope you are enjoying our videos, and I can definitely tell you, if you can follow our themes and get the concepts right, you will be able to solve most of the questions in UPSC Prelims. Now today, we will spend some time on understanding taxing. I have put the heading as taxation here. So generally, what type of questions UPSC is asking? UPSC is generally asking simple questions. And one is the terminology-based questions. Terminology in the sense, for example, equalization levy. So in 2016, it was in news, and therefore there was a question on equalization levy. Or in 2017, when GST has been pushed or GST has been launched, therefore there was a question on GST. Okay, so something that is something with respect to taxing that is there in news. And at the same time, they give some simple questions with respect to taxing. For example, there is recession in the economy, what has to be done by the government? Or suppose there is too much of inflation in the economy, what kind of fiscal measures government can take? And in that, one of the fiscal measures which the government can take can be taxing as well. Okay. So, based on that logic, there were some questions here. We'll solve the questions after some time. For example, which of the following is not a feature of VAT? So, value-added tax. Now, of course, they may not ask this question because today we don't have VAT. VAT is already pushed into SGST. Okay, so VAT was a feature of obviously the state governments. And here the option says basically subject of the central government, and the state governments are only a facilitator. So this is a wrong statement. So like this, there's a basic simple understanding of the taxing. If we know, then automatically solving questions will be easy. Or suppose there is this question, a decrease in tax to GDP ratio of a country indicates which of the following? Now, this was a tricky question at point of time. Whenever there are questions like this, where there is some comparison, you have to understand this, very important. There is comparison between two factors. For example, when we are saying demand, supply. So when we talk about demand supply curves also, we say, for example, the supplier wants to supply more and more raw material when the price is at a higher level. That means when the price is increasing. So always, the supplier always wants to supply more material at higher prices. But we also say, all other things remaining constant. So this concept, this aspect, all other things remaining. Why are we saying all other things? Because if there are multiple aspects involved, then you can't take a proper decision. Multiple aspects can vary the decision of the supplier. Similarly, when there are questions on taxing also, so the taxing question, for example, slowing economic growth rate. Okay. Now the question comes up, here we are comparing tax to economic growth. We should not bring in other factors. I have to only look into tax and economic growth. Now what is other factor? Tax and economic growth, maybe what if it is a tax haven? That's another factor. What if it is not a tax haven? That's something like bringing in other factors also in solving such questions is risky. So when I take growth and GDP, so generally whenever GDP is increasing, then tax collections will increase. It's a common concept. But what if though GDP is increasing, tax collections are not increasing because government has given more concessions? So this government giving more concessions or that particular country being a tax haven, these things are basically associated criteria which we are not going to consider. So we are only taking two factors. Because for taking all those criteria, you need an Excel sheet which we can't do in the exam hall. So you're only taking two. So what are the two factors here? Slowing economic growth rates, impact on tax to GDP. So whenever economic growth rate is at a lower level, then tax collections will be less. So tax to GDP will be less. When the economy is growing, tax collections will be more. So tax to GDP will be more. Okay. Then less equitable distribution of national income. Now, tax to GDP ratio will not be in a position to indicate distribution of income. Why? Because let's say if the tax is only coming from the top 10% of the population, then under such circumstances, we cannot comment on equitable distribution of national income. So therefore, only the first statement is going to be right. Here, don't look into the answer. So tomorrow, if a similar kind of question comes up, what is the learning I can have from this particular question? That becomes more important. Okay. Now, this is a simple word kind of question. For example, they were asking capital adequacy ratio is related to what? It was related to banking. These are simple kind of questions. Similarly, base erosion and profit shifting is sometimes seen in the news in the context of. So, it is basically related to taxing. If we know it is related to taxing, we can know. So, curbing of the tax evasion by multinational companies. Okay. So, this is something like in the today's context. Now, what kind of questions they can ask? Okay, so that is something which we should understand. Now, what are the most likely advantages of GST? Now, these are questions from which we have to learn, like, if there are extreme statements, we can push those statements off. This came up in 2017 because GST was implemented in 2017. So, this is something like we'll learn, like, if there is an extreme statement, 99% that statement is wrong. That is the learning. For example, see, it will drastically reduce the current account deficit. Current account deficit is somewhere and tax collection is somewhere, GST. How can it drastically? That is nonsense. Okay, it will enormously increase the growth and size of economy of India and will enable it to overtake China. Overtaking China, what kind of statement is that? So overtake China just because you have come up with some tax. So that is also we can say it's a statement which is overestimated too much. Okay. So what is left? It will replace multiple taxes collected by multiple authorities and will thus create a single market in India. That's all. So extreme statements have to be eliminated. That is something which is the learning from this particular aspect. Now, equalization tax was asked. Why was it asked? Because in 2016, equalization tax was asked, and equalization tax was asked in such a way that because it was responsible for something like prevention of tax avoidance. Now, two terms here. One is tax evasion, another one is tax avoidance. Tax evasion is basically illegal. Tax avoidance is we are using the tax loopholes in the system. We are using tax loopholes in the system to avoid paying tax. That is what is tax avoidance. Okay, so equalization levy was mainly for e-commerce companies or companies like Facebook, etc. Okay, we had taxes in France like GAFA, Google, Amazon, Facebook, Apple. So when we talk about such kind of taxes, it was something which was introduced in the finance bill and not part of the Income Tax Act. Okay, so that was the purpose. And when something like a new launch comes up, so that becomes important for the exam. So it is introduced as part of the Income Tax Act, which is wrong. Non-resident entities that offer advertisement services in India can claim a tax credit in their home country under the D double. No, it is not like a regular tax, not like a regular tax, and therefore they cannot claim any concession on it. Cannot claim any concession with respect to it. Okay, so answer should be neither one nor two. Now see this, consider the following items: cereals, grains, hulled, fish processed and canned, chicken, eggs cooked, newspaper containing advertising material. Now there are four things here. Now the question says, which of the items are exempted under GST? Now the question is, why are exemptions under GST? Now we cannot remember everything. We have to use our logic for answering such questions. For example, here it says processed fish. So there is some amount of value addition. So there should be some tax. So here we will say, yes, 3 should be there in my answer probably, because 3 should not be exempted. Why 3 should not be exempted? Because there is something like processing here. So 3 should be there in my answer. So if 3 has to be there, then automatically B, my answer should be something like exempted. So 3 cannot be exempted. So 3 should not be there. So wherever there is 3, I have to remove that. So B have to be removed and D also has to be removed because 3 is there. Okay, then it should be either A or C. That is how we go ahead with this. Okay, so then cereal grains, something like a basic entity. Then 2 chicken eggs cooked, looks like a basic entity. Why can't it be? And then newspaper. Newspaper advertisement has GST, but newspaper does not have GST. Okay, so exempted. So cereal grains, hulled, exempted. Chicken eggs cooked, exempted. Newspaper, exempted. We are not paying GST, but advertisement in the newspaper, there will be GST. So answer should be 1, 2, and 4. 1, 2, and 4. So this is how we have to understand. Okay, so while solving questions, very important with respect to taxing. Okay, so then which among the following steps is most likely to be taken at the time of economic recession? So there is a downfall. So what has to be done during economic recession is we have to pump more money into the economy. So all measures in terms of pumping more money into the economy becomes more important here. So cutting in tax rates accompanied by increase in interest rates. No, increase in interest rates cannot pull you. Increase in expenditure on public projects, increase in tax rates. So increase in tax rates is not going to work out. Most likely to be taken at the time of economic recession. Reduction of expenditure, no. You have to pump money. Increase in tax rates, no. Increase in expenditure on public projects, this should be there. Cut in tax rates accompanied by increase in interest rates, no. So second one looks more apt. Okay, so that is how we have to solve. Okay, so which of the following situation best reflects indirect transfers often talked about in the media recently with reference to India? So indirect transfer is something like not direct. So here a foreign company transfers shares and such shares derive their substantial value from assets located in India. So this is what is indirect transfers, transfer of shares. So something like not an asset kind of thing. So therefore the answer should be 4. We have to use more of logic in taxing rather than going ahead with just implementation like that.